Steve Costabile, Head of Private Funds at Pinebridge. Welcome to SuperInvestor 2014.
Thanks.
What are the main questions being asked in the industry at the moment and therefore discussed at SuperInvestor?
Well, I think as we look, the main questions come into what are the main themes we're seeing globally. And I do think we're seeing two major themes. It's the search for yield and the search for growth. And really those two broad themes are really driving the markets today. To certain degrees distorting a lot of the markets, especially on the credit side. So as we see the search for yield and the movement of the high yield markets and the flow of capital going in there, we're seeing a skewing of essentially the returns falling, the yields falling on high yield, but that's creating voids in the private markets. So for smaller businesses, it's getting harder and harder for them to finance their businesses because the traditional lenders have moved away and they're looking for larger deals that they can syndicate. They don't want to be owners of the loans. And so we're finding that there's voids being created that private market lenders can step in and get disproportionately rewarded for filling those voids. And so every time there's a yin, there's a yang, right? So every time there's a flow of capital overfunding one side of the world, it opens up areas on the other side. The same true as the search for growth. So, generally the developed markets right now, top line growth is sparse, hard to come by. And the traditional providers of growth, whether it was China, India, Brazil, and to a certain degree Russia, is now not happening. And so where are we finding growth? And so I think capital flows are going toward areas like Mexico, other parts of Latin America, Chile, Peru, Colombia, and then sub-Saharan Africa. So the needs for these capital to find growth is positioning there. And then the hopes, as you position your capital in these economies, large strategics in the developed markets that don't have any top-line growth will acquire the inventory of these companies in these emerging markets to pursue their own growth strategies.
You hope there's a more sustainable approach then, if you like, because you think people have taken an easy option with credit around?
Well, what's interesting, that's right, you'll see a lot of larger buyout shops saying, well, we're just being rational, we're taking advantage of what the capital markets are giving us. But to a certain degree, when you look at how they've been utilizing the capital markets and the fact that in today's world, with covenant light, which really means no covenants other than to pay interest, is that model truly sustainable over the long term? And ultimately, yes, you're getting these efficient capital structures today, but will they be sustainable if we come to those inevitable bumps in the road?
So are you saying be brave, if you like, take the harder option?
I think if you follow the flow trade right now and take the path of least resistance, ultimately, we think that sets you up for suboptimal returns. And I do think you have to be in a world today where you have to be prepared to do things that are harder, whether it's smaller deals, small mid-market growth funds, looking at new geographies where there is growth, looking at strategies like taking advantage of the private credit markets and supplying your capital that takes advantage of those voids. That's really, I think, where investors have to be prepared to go today, because if you follow the flow trade, you're going to be disappointed ultimately.
Do you think this tendency towards following that flow, if you like, is to do with the concerns slightly about regulation and things as well, because there's lots of different factors coming into play?
Well, I think what we're seeing is that investors sometimes rely too much on past as prologue, and essentially they have to stop and take a deep breath and say, is this sustainable? Will this trend that I've taken advantage of over the last 3 years be sustainable over the next 3 or 5? And I think that's where they have to take a pause. Certainly the regulatory environments in the developed markets especially continue to evolve. And we do think that creates opportunity, again, in those areas where you're willing to do the harder things. The regulatory regimes in Europe and the US that create an environment where the banks don't want to lend to small mid-market businesses are allowing private market lenders to get disproportionately rewarded. It's harder to do that due diligence, but if you're willing to position yourself there, you will reap the rewards of doing so.
You've talked about reaping rewards. How do you measure performance at the moment?
I think how we measure performance is not so much the performance in and of itself, it's how you created that performance. Is that sustainable? So for instance, if you've relied on recapitalizing your business or using the capital markets as opposed to focusing on operational aspects of your businesses, we think that that's not going to be sustainable. So it's really about, did you generate your returns from fundamentally repositioning your businesses for a modest to low growth macro environment so you can execute properly into the future, as opposed to relying simply on financial engineering.
Are you optimistic at the moment?
You know what? I'm optimistic, but I'm also pessimistic in some markets. But that creates the opportunity. So I can be pessimistic, saying I'm worried about the high yield markets. I'm worried about bubbles being created. I'm worried about the distortion that's being created by unprecedented stimulus from central banks. But that creates opportunity where I can be optimistic about it. And so for me, it's just a fluid situation where when one door closes, another opens, and we just have to be prepared as investors to take clients to where those doors are opening.
And this is a great environment to do that as
Absolutely.
SuperInvestor.
I mean, you get so many different perspectives from people operating in different parts of the private markets that, it's always helpful to hear those points of view.
Steve, thank you very much for joining us.
No, my pleasure. Thank you.